And I predicted at the beginning of this year that we would be in a recession by summer, and that seemed like a pretty brash prediction. And now, as we look at economic changes that are happening right now, the economy is running downhill pretty fast in a lot of ways.
Thanks for watching this RTD interview. Don't forget to pick up your RTD Scary George round, only available at SDBullion.com. Now enjoy this interview. Thanks for joining me for this Rethinking a Dollar interview. Today I'm excited to have returning guest, Mr. David Haggith, the author and creator of the Great Recession blog.info. Today, David joins us to share his thoughts on the global economy, as well as a couple key indicators that points to the idea that we're currently in a recession. So I'm happy to have you back on the show, Dave. Welcome back to Rethinking a Dollar.
Mike, glad to join you.
Well, I appreciate you taking time to sit down and share your thoughts on what's going on in this world right now. There's a lot of things happening. So we are currently 10 years, post Great Recession, as far as the entire meltdown, and we've saw a variety of monetary policy and tools that have been implemented that have brought us to this point now. And so currently, halfway through the year 2019, what are some things that you see or things that concern you that you're probably writing about or warning people about at this current moment?
Well, it's kind of a two-handed thing that I'm looking at is one, I'm looking at just the whole general economic condition and how rapidly it's deteriorating. And I predicted at the beginning of this year that we would be in a recession by summer. And that seemed like a pretty brash prediction because I hadn't heard anybody else saying that. And I thought, well, I'm kind of putting myself way out on a limb here to predict a date that soon, because most people were saying, oh, a year, maybe 2 years. And well, that's kind of a pretty safe bet. But I felt like it probably would be here by summer, so I was just going to go out there and say that. And now, as we look at economic changes that are happening right now, the economy is running downhill pretty fast in a lot of ways. And I just did a recent article on that, and I laid out 10 steps down the road to recession that we've already taken. And there's some pretty big steps. So that's one side of where the economy's going. The other side is some of the interesting speeches by the Federal Reserve and the Bank for International Settlements. Maybe it should be sediments in the last couple of years or in the last couple of months about going to digital currencies and about the need for the Fed to make such massive changes and how it goes about things that it needs to hold town meetings to prepare the public for it. And I found that really fascinating. So I've written some of my premium posts, which are the ones that only people who support the website with donations get. But I'd be free to share some of that with your viewers now if you wanted to too.
All right. Well, I like where we're heading thus far. Let's unwrap some of that. So you said two things or two areas you're focused on. The very first one, you mentioned that you were willing and wanting to just basically say by summer of this year, there will be a recession. And so apart from just your personal opinion, were there any type of indicators or anything that really led to you being able to say that this summer would be that recession type of talk? And we're here now. So what are some things that gave you that insight there?
Yeah, so the 10 steps that I laid down the road we've taken, the first one is the big decline in factory orders and manufacturing. And that's fallen off really steeply for about the last 6 months and has now gone into a negative contraction mode. So I laid out several graphs there showing just how much manufacturing has fallen off, according to the Dallas Fed survey, the Empire State survey, and several other surveys that have shown manufacturing is now some surveys show it just entering decline, some show it just about to enter a time of contraction. And then people have looked at the services sector of the economy and said, well, manufacturing is down, but services are up, and they were building hope based on that. But services are no longer up. They too are almost at that decline or contraction threshold. Then we've got the inversion of the yield curve that's happened. And, whenever the yield curve is inverted, we've gone into recession shortly thereafter, and we've been in an inversion now for a few months' time. Unemployment has begun to rise, and it's just barely begun to tick up, but that's usually right where a recession starts, as we go on this long downhill slope of unemployment. And then we kind of get to where we just start to form a trough at the bottom. And at the first little uptick at that trough, you'll see often that's exactly where recessions time out when they're eventually declared. The thing is, of course, the recession doesn't get declared until 6 months after it happens. So we don't always know we're in it until it's almost over. Other steps that I laid out were just the recent market IPO insanity. It seems like unprofitability is no obstacle anymore to creating an IPO. It's almost a cherished trait of IPOs, just like it was back in the dot-com bust. And we have more unprofitable IPOs being offered now than we have had since the time of the dot-com bust. Housing continues in decline. Car sales continue in decline. They're morphing into declines in RV sales. Freight is in decline. Business conditions are tightening quickly. And then we got, of course, all our problems with trade winds.
Yeah. So I assume that, with those things you mentioned, they're obvious. I would assume the Fed know that. So, and then the second part, you mentioned that, the Federal Reserve is out and about campaigning or trying to get public sentiment and thoughts. Because I've also been following that heavily, to where Jerome Powell looks like they're traveling the country, open up discussions on how and what they should be doing, as if they're open to ideas now. And then they're talking about, going into the monetary toolkit, their toolkit, whatever that is. We already know what they've done before. So what do you think they're sensing and about to do now, given the fact you just listed 10 things that's obvious? They know about it. What are they going to do about it, in your opinion?
Yeah, well, it sounds like they're getting ready for trying to ramp up inflation hotter than it's been before, because they recognize the recovery didn't succeed with the amount of inflation they tried to create. They really couldn't create much inflation. Maybe they're getting ready for a super round of quantitative easing is one thing. That just lowering interest rates, they haven't got that much farther they can lower them. And so they want to pump some serious money into the economy. Maybe it's this idea of helicopter money. Powell hasn't been really clear on that, but what he has said, and I think there's kind of two concerns they have. One is their reputation is deteriorating because their recovery has failed and because Trump's pounding them on the head all the time. The stock market is demanding that they do something, 100% expectancy of a rate decrease this month. And so they got a lot of political pressure on them. And I think they're afraid of that. So on the one hand, they're trying to recover their image of being independent. So I pulled out a quote here from Jerome Powell in one of his recent speeches, where he says, "We live in a time of intense scrutiny and declining trust in public institutions around the world. And at the Fed, we are committed to working hard to build and sustain the public trust. Our monetary policy independence allows us to serve the public without regard to short-term political considerations, which, as history has shown, is critical for sound monetary policy making." So I think, they're feeling the pressure that Trump is giving, which looks like if they make any changes right now or make any moves, they're going to be doing it because Trump has said so. And then they're going to lose that sense of policy independence that they say is so important for them to cultivate. He went on from that to talk about a makeup strategy, by which he said, really what we need to do is to have a makeup strategy on inflation, that inflation has run low for years. And so what we need to do is run hot for years, and so that it all averages out. So he says the central bank would deliberately make up lost inflation by stimulating the economy and temporarily pushing inflation modestly above the target. So, that's why they need to have town meetings, because if people see the Fed pushing the inflation rate above the target, they're going to go, whoa, you're supposed to be aiming for your target. Why are you going higher? So they need to convince the public through town meetings all over the country that this is part of a plan, and it's, a fair and balanced way of doing things, because inflation has run low. So now we're going to run it hot, and it all averages out to right where we want it to be.
Yeah. Now, here's one of my concerns about letting inflation run hot, because their mandate of 2%, as far as how it's measured is a concern, because according to how they calculate their particular inflation target is not really in sync with reality or Main Street as far as actual goods and services that people actually use. And so do you think they care about the fact that their measurement and the way they measure it really matters? Or are they going to target a couple different areas that they want to run a little hot in the sense of it just makes prices going up? Or do you think they want to actually, continue to inflate the current bubbles a little bit more, or they want it to come out Main Street where people fill in their pockets more?
It's a good question whether or not they want to inflate bubbles. And I don't know if that's really what they want to do. But it's what's going to happen, whether it's what they're, some sort of hidden agenda or whatever it is. They never say they wanted to inflate bubbles. but they do certainly have a way of measuring the inflation that kind of overlooks a lot of the things that matter to a lot of us. Tuition costs, housing costs. They have a really crazy way that they estimate the value of housing that is not related to what any of us pay for housing. So yeah, we'll feel inflation at a higher rate than what they'll see it at. So their little bit of superinflation will probably be a lot of superinflation to most of us out there.
Yeah, and I've heard people mention that if they reach their target or exceed their target, because I heard them float the idea of possibly raising the target, but then I remember Jerome Powell saying that's not something they're wanting to do right now. They're going to primarily use a tool of interest rates, using that as their primary tool. But yet my question would be, if inflation does raise, will they be able to contain it? And then will they lose control of it? And can they bring it back down to their own measurement of 2% if it goes well beyond that 2%, in your opinion?
Well, one of the things that's interesting is they seem to have lost control of inflation a long time ago, because they've been saying for years now that we want to get inflation up to 2%, and they haven't succeeded to do that other than just very briefly of recent. So I don't think they have a lot of control over inflation. And the reason for that is because we're in a very deflationary kind of economy because of the economic crash that happened with the housing crisis. That would have naturally taken inflation of all kinds of things down, and the Fed has done the best it can to pump that back up. We wound up seeing most of that going into inflation of housing prices all over again, which we needed like a hole in the head, and into the inflation of stocks and the value of bonds and things like that. So we've had a huge amount of inflation, but it's all gone in asset prices that have benefited mostly wealthy people.
Yeah. Now, what's the primary focus of the Federal Reserve at this current point? Is it to keep this, as Jerome Powell mentioned, keep this expansion going? Because he mentioned about being willing to do anything to keep it going. And so I'm assuming that he realizes if it stops or comes to a halt, or if there's a hiccup, then poof goes the central banking magic, money, funny money, or what? What do you think he's really focusing on as his primary measurement to keep this expansion going?
I think what he's really focusing on is keeping the Federal Reserve alive. All his talk about the need of the Fed to maintain independence, about the lack of trust in public institutions, shows he's realizing that because the Fed was not able to do what it said it could with tightening up on the economy, that people are starting to understand the Fed didn't have an end game in the first place that's going to work, and that it's now scrapping to find plans that it can try to use. So I think he recognizes that the Fed has lost a lot of public reputation, and that if they don't have that public trust, that's really the only real currency they have to sell. And so everything is bent on that, and trying to prove on the one hand that he's not beholden to the stock market. He's not the stock market slave. He's not Trump's slave. And I think those are his main objectives. And that's going to make this a real tough tightrope to walk this week as he talks to Congress. And then at the end of the month, as they decide on what they need to do with interest, because they are facing a declining economy. And if they use their old tools of lowering interest, it's certainly going to look like they're capitulating to the market and to Trump. So they've got a real challenge on their hand of how they're going to manage this public relation things. It should be interesting to watch in the next couple of weeks as this plays out.
All right. So not only are we watching and concerned with these matters here with our own central bank, but yet we have the whole trade situation, which it seems like it's turned into somewhat of a currency situation, because we have a president that's very vocal via his cell phone on Twitter. And so he's stirring up a lot of pots around the world. And so what are your thoughts on this trade war? This definitely doesn't help the current economic conditions for the central bank here. And so, where did this trade war situation go? Does it get better? Does it get worse? Or what happens down the line, you think?
Well, I think that's a really interesting tell on the market right now. They say before market crashes, it has to become irrationally exuberant. And I don't know what could be more irrationally exuberant than the last 6 months that we've seen of the market going up in this belief that the trade war is going to end soon, when there's been absolutely nothing in the form of real news out of China that indicates there's any possibility that the trade war is going to end soon. All you've got is Trump's little tweets, like you say, saying, oh, it's going to be here soon. And how many times have we heard that? This is like Lucy, pulling the football out from Linus. They say it again and again, and every time it's a fake. There's nothing happens at any of these meetings that gets us any closer. So I don't think it's going to be resolved soon. I think China's in this for the long game. Xi knows that he doesn't have to get reelected, and Trump does if Trump's going to continue the game. So if the United States economy crashes because of this, well, that'll help get Trump out of the way because we never re-elect a president under a crashed economy. So I don't think Z has too much trouble with holding out for the short term. To them, a year and a half after the years of poverty that China has known, the decades, generations, centuries, is nothing. So I think that China's in it for the long game, and China will hold out and hopes of a better deal with somebody else in charge.
Yeah, now it's interesting that you mentioned that because I'm assuming you probably saw President Trump's tweet about if I'm not reelected in 2020, then the markets will crash or something of that nature, which was very, very loud and very bold in a sense. What are your thoughts on that? I mean, we have the presidential or the political cycle here now coming up. We got the Democratic side. Looks like they're running on free stuff and, debt jubilees primarily. And then we got Trump over here. No one said that no one can beat him. He's very confident, cocky. How all this play out in your opinion in the days ahead?
I have no idea how the election stuff's going to play out because the way, Trump took things when nobody expected he was going to, except his own supporters last time. Who knows what's going to happen this time, right? I would spend more time trying to predict where the economy is going than trying to predict who's going to get elected.
Yeah, good point.
He's got a lot of supporters and his base loves him, so.
Yeah. Now, I find it very interesting, and I comment on this a lot about how he ran on a bubble economy, but now he's decided to own the economy. And so just today, watching a presentation of him about to fly somewhere, he was saying the economy's strong. He always references the economy is strong. We got the strongest economy, strongest. And I'm thinking he clearly has to know that he's continuing on what he inherited. He ran on the idea that it was a bubble, but now I guess everything is fine. So, will he continue to ride this train wave of great economics and we got the best economy in the world? Is he playing a game in your opinion, or is he just doing what every president should do to keep confidence high, as far as, the overall financial conditions that people are invested in? What are your thoughts? Why is he so optimistic about our economy being so good when you've laid out several things that lets us know that it's not all that gravy?
Well, I think keeping confidence high, that's the operative word there, confidence, because the whole thing is a confidence game. I think that it's clear the economic indicators are that the economy is going down. I always said on my blog that there wasn't a chance in the world that the tax cuts were going to pay for themselves or that they would do much to stimulate the economy. And so here we are with these massive tax cuts, and it's a year later and the nation is going more deeply in debt faster than ever before. I mean, it's just absolutely plunging in debt. So the tax cuts aren't paying for themselves. The economic boost, if it's so great, why is Trump constantly pounding on the Fed to give more easing, more low interest rates? If you're in a great economy, you don't need that kind of help from the Fed. Now, he says if we do that, well, that's because then the economy will absolutely skyrocket. Well, the economy isn't even close to skyrocketing right now. The economy is starting to tank. And so all of those vital signs I gave that are going down, those are just hard facts, and they're facts that have been developing for the last several months now, and they're going down at a faster rate, not at a slower rate. So I think Trump's got to be concerned, and he's going to keep talking the game up all that he can in order to convince people that, things are good and they're going to get better, and we just need to get Powell in line. I don't think that Powell is going to come in line in time, because one of the things about Fed actions is they will work to change the market right away. The stock market's response is not only immediate, it's premature. It responds before the Fed even does its action. It responds when the Fed talks about the idea that it's going to do an action. On the other hand, the economy has a lag time well known of about at least 6 months minimum between the time the Fed changes interest rates or does easing and the time it actually starts to stimulate factories and production and consumers and things like that. So we're still at the mode where we're still just starting to experience the tightening that the Fed did back in December economically. The stock market's responding on a day-to-day basis, but the economy is still in the mode of responding to tightening. And the Fed has continued that tightening throughout all of the past months up to the present, and plans to continue its tightening up through September. So we've got a lot of lag time, and that puts a lot of down pressure on the economy that still has to play through.
Yeah. So it looks like if the recession is now, and so we're going to start feeling the tremors of this current recession, probably start of 2020, give or take from that time frame on. And so your blog is called The Great Recession Blog. And so once this expansion comes to an end or halt or a continuation, whatever they try to do to keep this thing going, if it was to stop, what would it look like in the financial markets across the globe? Because this is just not one. We're just talking primarily here. We're not talking about Europe and Australia, everywhere else where the bubbles may be bursting now or whatnot. The next 10 years, 2020 to 2030, in your opinion, what does things look like at that point?
It's hard to say exactly what it's going to look like because you don't know what they're going to jump up with in plans to try to rebuild, and how hard they're going to push and how successful they're going to be. But I would say in general what it's going to look like is the stock market still got farther to go down, and that's going to happen pretty quickly. I don't think it's going to push much above the point where it has now. This is the fourth time it's hit this same ceiling, and each time it tweaks it a tiny bit higher just to test and see if it can, and it fails and falls. And I think it's certainly going to go back down quickly here in the next month or two to probably where it went in December, and it may crash right through that floor and keep on going. But that's going to kind of depend on what the Fed does, how the market perceives it. This market is willing to believe anything that feeds it the narrative it wants to hear. So if the Fed says the right things, it might go up on, nothing but hope again. It's a really strange situation because the economic signs are going to keep going down, but the Fed has created this stock market where bad economy means more free Fed money, and the market's so completely addicted at this point to free Fed money that that's really the only thing it cares about. So you look at the last 6 months, economic signs have been going down, 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 and the stock market's been going up, up, up because it says, hey, yay, that means more free Fed money, and that trumps everything. So I'm not exactly sure how that equation blows apart, but one thing I am sure of is it is going to blow apart. It's like you're seeing this huge thing, it's over revving, and where the piece is going to fly when it blows up.
Right. Now, and so if they continue to try to prop this thing up and keep things going as planned, according to what they can control, that means there's going to continue to be that increased gap of income inequality, of wealth inequality, to where those that are in the know and those that have foresight to use this system to their advantage will continue to prosper. And those that have no clue as to what's going on in our financial system, nevertheless, the nature of our monetary system, they're going to continue to basically be on the short end of the stick. And so if this income gap continues to increase, what will society look like in the days ahead, given that people will become poorer and the rich will become richer? Will it ever become problematic for Main Street itself?
It seems like it has to, because how long can you go before you have a peasants' revolt, right? And that's why Trump is elected, is you see people that are upset with that, and he's tapping into that anger. But I don't see that he's done anything to drain the swamp other than to drain it all right into the White House, because he's got Goldman Sachs in charge of everything financial there. He's got the military industrial complex in charge of everything to do with national security and spying, et cetera. All the people that are in charge are the establishment. So it's kind of hard to understand how he's really the anti-establishment candidate. People say, well, he's playing 4D chess and he's keeping his enemies closer so that he can, be aware of what they're doing. I don't know. I find that harder and harder to believe.
Yeah. Now, if we were to just look outside of our own economy, and everything we've talked about is basically just in-house, if we were to go outside our house and look at what's happening around the world, I constantly read about inflated housing prices around the world. It's starting to correct. Equities markets is very volatile everywhere. And so, what will the dominoes possibly fall outside and head inward as far as our central bank government need to respond to external problems, or what? Because last time things started here and kind of trickled out, will it be an outside-in thing in this current situation, in your opinion or thoughts?
I tend to think it's going to be as it's starting to develop right now, and everything all at once kind of thing. Because I think the U.S. stock market, once it starts going back down again here soon, it's going to have some real problems. Housing is going to keep sliding. Manufacturing is going to keep going down. The trade war is not going to end. So we got a lot of stuff that's going to keep crushing down on our economy, but the same stuff is happening all over the world. There's a global housing crisis. It's not just a U.S. housing crisis. Last time, like you say, it was a U.S. housing crisis, and it started here, and then it blew up and damaged banks everywhere else. But now we got banks like Deutsche Bank that are already failing for all their own reasons, and they're going to hurt us as well as other parts of the world if they go down. We've got a housing crisis that's happening in Canada, that's happening in Australia, that's happening in the UK, each developing a little bit in its own different way in different niches, but progressively getting worse and worse in all of those places. So those are as likely to come down as ours are. I don't think housing necessarily leads the way, but it certainly joins the fall. I don't know. There's just so many bubbles ready to pop. Bonds themselves, are a massive bubble that could pop all over the world, and who knows when. Because if the Fed is taking interest rates down and other central banks are, then for a while that can, give the bond bubble all the more room to grow again. It started, having some problems, some liquidity problems, but now they're going to start lowering interest rates, and for people with bonds to sell, that makes those bonds worth more that they already have that have higher rates. So I don't know, that may buy some time, but all it does is reinflate that bubble until it blows.
Yeah. Now, as we draw towards the end of our chat, I'm curious to get your thoughts on some solutions or some practical steps that people can probably look to take now or in the days ahead, given all the things we've discussed that are problems. And so there's a lot of wealth that might be transferred from the hands of those that don't know to the hands of those that do know, that's positioning themselves to profit at the sake of a lot of people losing out. So in your opinion, what are some things that people can begin looking into doing to preserve, protect, or whatever, however it plays out for this next decade, which could be very, iffy and questionable for a lot of people?
Well, I don't advise people on their own financial plans, but what I've done on mine is I don't have any money left in stocks. I have money in cash and in bonds. I'm a little bit nervous about bonds because there is a huge bubble to blow up there, but thinking that the Fed is going to be forced to move to lower rates, I think my bond situation could be in a little trouble this month if it doesn't. That could be a real shock to the bond market. So I'm a little bit nervous about that. But ultimately, it's going to go into lowering rates, I think, almost certainly, and that's going to push the bond bubble up higher. So I'm not fond of being a part of bubbles, but that is way. People have made more money off of bonds even than off of stocks during this recovery. So that is one way to be a participant with those people who have been a part of the 1% and writing all of this up. A lot of them have made their money in bonds, but it is a little precarious. So I don't keep a lot in that pocket. I keep a lot in cash. I've never been a gold person, but I'm leaning more that way now. The reason I haven't been a gold person is central banks own gold in order to hoard it so that they can control the market price of gold. So there's risk there too. But right now, there's not a lot of other good options to go to. You got cash, bonds, gold. Bonds are problematic. Gold, I think, is a little bit more secure. Central banks may do their best to throw out some ballast and crash the price of gold, but it always comes back up again eventually, at least. Yeah. Right now, it's looking really good.
Yeah. Now, in the near future, do you see an event where there becomes a currency event to where, say, for example, the Federal Reserve note is no longer relied upon for international trade, to where the dollar becomes problematic? Like, we have countries right now going through currency issues. And so do you foresee a time where the currencies become the primary issue as a response to all this easing monetary policy tool stuff that they're implementing? And then at that point, what would be ideal then? Would metals probably be good as a recipient of some of that liquidity as far as the dollars if it becomes problematic?
I definitely see it becoming problematic. One of the things that I get into in the premium posts I talk about for donors that I will mention now is the talk on central banks of moving towards a central bank digital currency. The head of the Bank of International Settlements just really pounded that point hard in some of his recent speeches, saying that central banks need to take control of digital currencies. Otherwise, digital currencies are going to take this control away from central banks. And to protect the people, ostensibly, he says, we need to take control of these currencies. We need to have our own central bank digital currency. So there is a move by central banks to go cashless. This may very well be one of the reasons Powell wants to have his town meetings. It's not something he's going to say overtly publicly, because the purpose of the town meetings is to start preparing people for things they don't want to hear or things they might have a problem with. So you start easing into that conversation in the town meetings, finding ways that you can talk about it that people don't react against, sort of testing their responses.
Yeah. Well, we will have to wait and see, unfortunately, because, we're in the midst of a storm now. And so we'll see how things pan out or how things turn out in the future. So for those, as we draw towards the end, I'm curious for those that might want to find out more about your work. Can you tell them where your blog at? Give us some details how to stay in tune with what you have going on, Dave.
Sure, thanks. You could go to thegreatrecessionblog.info or just thegreatrecession.info. Go to thegreatrecession.info.
All right, sounds good. So I'll definitely link that beneath this video here. But Dave Haggith, has been great having you join us here. I was looking forward to staying in contact with you and continue to follow your work. And we'll see how things turn out in the future. But hopefully we'll pray for the best. That's all I can say.
Okay, thanks, Mike. It's going to be a ride from here on out.